Welcome back to Crypto 618 channel, and in today's video we're going to take a look at the bear market strategies. Don't feed the bears. They will kill you, that's for sure. But before we get started, if you'd like to see more of these videos, hit the subscribe button and the bell notification icon, and let's get into it. So bear market strategies. We'll dive into some different strategies people are using. So let's jump into the first key points I want to make about the market. So the first thing is Bitcoin is down 57% in the last 182 days from all-time high. So if we jump over on the Bitcoin chart, you can see here, this is on the weekly. And if we just put just have a look at that last all-time high and down to where we are, we're in about 62% currently. And that's how much it's dropped, literally. So if you had bought anywhere up near the top, which between 60 and 70,000, maybe 68,000, you're literally looking at maybe a drawdown of about 60%, which is, quite a bit. So the next one is Bitcoin is below its 50-day moving average. This is this little blue line. We've got the 50 and the 200. I'll just turn off the 200 for a second. So that's the 50-day here. As you can see, it crossed over back in April all the way up here. And then we had a cross over around about the 3rd of January. And then since that point, the markets have been going down. They have went back up, retested that, broke through it a little bit, and then rejected that and it's come back down now. So we're definitely under that 50-day moving average. Now the crypto market cap is down from 3 trillion to 1.2 trillion since all-time high. So if we have a look at that now, you can see here, we have a look at the last all-time high, which is around about 8th of November. And you can see how much we're down to about 1.2. So it's quite down a bit. So about 1.2 is difference. It was around about 3, and it's down just over 1 trillion on the market. So the market has dropped significantly in the last period of time, and especially in probably the last 5-6 days, we've seen a massive decline in the market, as you would have known. So what can we do about this? Is it all doom and gloom? Well, I don't think so. But here's some options you've got. So the first one is you could sell. You could sell all your crypto into cash, get out of the crypto market, and wait until the bull market returns and buy again. So by doing that, though, you would, whatever losses you have here, you would be realizing those losses. So that's the only interesting thing about that strategy. It would have been handy if you had sold maybe up here in October, November, anywhere in this time when the market was going really strong. If you sold anywhere along there and cashed out, you would be in a good position now to buy back in. But if you do sell now and get out of the market, you basically, most likely a lot of you are selling at a loss, and then you're waiting for the new bull market to start. So not a bad strategy, but it would have been preferential to perhaps sell out when it was a lot higher than sell out low, because there's no fun in buying up here and selling down here. So if that's what's happened to you, maybe you should think about a different strategy. But if you had gotten down somewhere in this range here, if we switch back to Bitcoin, and you got in 8,000, even 20,000, and rode up any of these two peaks here and sold anywhere between $50,000 and $60,000, you would make good profit if you chose to sell out any of that. And if you waited for it to come back down, which is where we are right now, you'd be in a good position to buy again and enter the market if this is where you think the low is. So yeah, you could sell. That's one option. The second option is buy and hodl. So with this strategy, you're not selling any of your crypto, so you might be down half, 3/4, maybe 98%, I don't know. But in this scenario, you don't sell your crypto. You convert fiat to crypto on a regular basis. So in this respect, you might like put aside, wages maybe once a week. You would put aside something out of your wages and convert that into crypto. You might put into Bitcoin or Ethereum or something like that, any of the coins that you like, the blue chips, and you're converting that, building that up slowly. And then you might look at buying crypto projects that will survive the bear market. So there's a lot of projects that didn't survive the last bear market, and that's what you've got to look at. Has this project got the ability to survive through, whether it's 1 year, whether it's 3 months, 6 months, 12 months, or even 3 years? Can this project survive? Has it got the amount of money in it to keep this project alive? Because if you have a bear market and you buy into one of these projects, then it's got to last, because when it comes out the end of the bear market and we switch back into bull market, you want that token to be around, you want that project to be around. So that's one of the key criterias of getting into projects that will survive the bear market. So let's go on to some other options. One is short trading. So not many people know about this, but you can actually make money when crypto goes down. So if we have a look at Bitcoin, normally you can go and buy Bitcoin on any exchange or anywhere. Even on a DEX, you can buy Bitcoin and hold it, and you can sell it up here, and you make that money between what you buy and what you sell. But a lot of new people don't know that you can actually make money when crypto goes down. And this is done through different ways, but the popular way is using future contracts or perpetual contracts. And you'll find them on places like KuCoin, Binance, Bybit, and DYDX, which is a decentralized exchange. So when you're doing short trading, what happens is you take a position, and you might have, instead of buying, you open up a short position. And if you opened up a short position on Bitcoin, maybe at 64,000, as it goes down and down, you're actually in profit. And then you close your position somewhere down here. Let's for easy numbers, let's say it was 60. And you went down all the way down to, maybe you actually caught it all the way down to 30. So from 60 to 30,000, literally that's like a $30,000 movement. And if you were in that trade for that period of time and you were shorting it, you would make significant profits between those two levels. So that's one way you can do it using shorting. And it does get a little bit tricky. There's a lot to learn in terms of the different aspects, because future contracts have an expiry date, but perpetual contracts don't. But generally, either of them, you'll have to pay interest rates. And the interest rates are basically there because if you want to sell something first and then buy it back, which is what you're doing with short trading, you need to actually have that crypto that you want to short. So for example, with Bitcoin, if you don't own Bitcoin and you want to short it, you need to borrow that Bitcoin from someone off the market, and you'll pay interest on that. And then what happens is when you close your position, during this whole time, you'll be paying interest on to the person that was holding that Bitcoin, or essentially the market. So a lot of the exchanges provide that service, and you'll just pay an interest rate, and that's incorporated. But if you make such a lot of profit, then the interest rate is minor, and you've made a lot of money on the market going down. So that is pretty cool. It's not always relevant. Obviously, in a bull market, you wouldn't use any sort of shorting really. But in this market right now, in the last couple of months, there would have been some really good opportunities to do some short trading. And another example, just recently with Luna, a lot of people shorted Luna, both the Luna and Terra, both those tokens. When they collapsed, as they were collapsing, people were short trading and making money as the actual token was going down in price. So that's pretty cool. Another strategy you can use, a little bit more complicated, is short farming. So normally you might be familiar with just farming, where you buy a token and then you put it in a liquidity pool with another token, and essentially you'll receive extra tokens. And those reward tokens you'll get and you'll accumulate, because let's say you think the project's good long term, so you would farm it and you would get those extra tokens, which would be like it acts sort of like an interest rate. So they might be offering 10, 20, 30% or even 100% APR. And then what happens is you're holding that for that period of time. And let's say the price doesn't change over that period of time, over a course of a year. Well, you'll earn all those extra tokens in whatever reward they're giving. And then once you've got those tokens, you then have more tokens at whatever value is. So essentially you're increasing your position over time and you're making money. But there's another thing you can do, which is short farming. And that is where you're making money while the token is going down and you're farming it on the way down. So the way you would do this is you would farm tokens while the price goes down and make profits. So you could deposit a stable coin and borrow the token to farm. And then with that farm token, you would zap that into an LP, liquidity pool, and then you would auto compound. Now, when the farm token price goes down over time, you remember you're also getting reward tokens during this time. And then you would exit your LP with more farm tokens. And when you exit it, you'll actually have more of those farm tokens than you borrowed. So then you repay your loan and you sell those extra farm tokens for profit. So an example, you could use Aave, Compound Venus, or DForce, and maybe Beefy. So you usually have to have like a lending protocol and something like an aggregator where you can, or you can just, or like a farm. And essentially what you want to do is you want to put like a coin, let's say a stable coin in, like USDC for example, and then you want to get a farming coin. So maybe you want to farm a coin that is available that for farming, and you just want to check on those different apps or dApps to see if those are available. And if you can find a coin that you can farm and you can actually get it like that can be lent in the other things like Aave and Compound and Venus, what you do is you just do that process, and then you can actually go through it. So I won't go through it now because it's quite a bit involved, but I just want to give you a brief idea of some of the different steps involved. So, which one are you going to do? Are you going to sell and take out the cash and take all your losses and then get back into the market later? Or are you going to just buy and hold, keep hodling and keep buying crypto every chance you get to increase your position? Or you're looking into short trading and making money and learning about that? Is that something that interests you? Or you're into maybe in the DeFi and the farming aspect where you want to make money farming while they're going down. So I'd love to hear your thoughts. If any of these strategies you think are useful, if you like to comment down below, that'd be cool. And it'd be interesting to see what other strategies we can come up with. If you know of any other strategies that in the bear market, feel free to put them in the comments below and I'll have a look at them, and we might even do a video on it. So I think that's all I wanted to cover today. Just a quick video, no in-depth, nothing too crazy today. But if you have liked this video, just hit the thumbs up button and hit the subscribe button and the bell notification icon if you would like to see more of these videos. And if you'd like to support the channel, just click on this little button here, support the channel, and you can join our private Discord. Or if you want to get our newsletter, just click here, subscribe to newsletter, and we'll send you the videos daily so you can keep up to date with what's going on. I think that's it for today. So thank you very much, and I will talk to you guys soon. Thanks, guys. Bye.